Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. All right, what's up, guys? Welcome back to another live stream for 0x Research. Today, I am joined by my gracious co-host, Daniel, as well as Teddy Oosterban. I assume that's how you say it. Ian Unsworth and Ryan Connor from Blockworks Research. Everyone here is in research, including Teddy and Ian, who are at Kairos Research. I see that, Teddy, you claim to be Associate VP at Kairos. Is this true, Ian? Or how does this... You know what? Can we actually do this? How do you guys work together? What is the general setup?
Are you looking for the org structure?
Yeah, I'm looking for the org structure.
We can pull up an org chart, Teddy.
I thought he was asking, like, how do we work together in the office? We have one cubicle that we both sit at the same desk.
Right. Very good.
Yeah, one chair. We laugh up to save costs. But
It's
maybe a pump 3Xs, we can get 2 chairs.
Horizontal org structure, I would say.
Very good. Danny, do we have to do something before we get started? Am I supposed to talk about somebody?
Just a quick shout out to Katana. You'll hear more about them later today. Otherwise, we probably should talk about our own business. DAS is coming up next month. Boccaccio is going to be there. I don't know if Ryan is going to be there. I know Mark Arjun. Ryan, you will be there. Thumbs up. We love that. Mark Arjun will be there. Those are the only ones that I know for sure from the research team. But you can, I guess we got a couple things going on. You can get a free ticket to DAS next month if you can refer 15 people to our Blockworks newsletters. So you can find a link in the show notes, or just go check out the newsletters, check out DAS websites. Or if you want to buy a ticket, you can get £100 off. 0x100 is the code.
Very good. Yeah, I think Ian and Teddy are also going to be there, but Ian is not booked in yet because he's trying to do the referral thing right now. So we're going to see.
How many email referrals for a plane ticket?
Ryan,
I think I saw at the bottom of the newsletter.
Ryan, is that something we're doing or no?
I'm not associated with the event side of the business.
It might be. I'll connect you to the relevant party.
Ryan taking no responsibility.
I have to purchase a ticket like everyone else.
Okay, very good. Maybe I'll do a newsletter as well, since we're still waiting for people to trickle in, and people are generally excited about advertisements. So if they see it, they'll be like, wow, I need to come on. We are writing the 0x Research newsletter as the Blockworks Research analyst team again. This morning, I wrote it. If anybody cares, you can read it on Blockworks Research /newsletter. There's also a QR code at the bottom right. Make sure to subscribe. We write every day. We write about what we care about in the market, what we're looking into. And oftentimes those newsletters become flash notes that are sent to our subscribers. So a lot of it is alpha, or at least like remotely interesting for you to read about. So I would highly recommend checking it out. Ryan, do you have anything you'd like to share?
It's free and it shouldn't be. So get it while it's hot.
Very good. Okay. Feels weird that Ian, Teddy, do you guys also want to share something, or should we just get started properly?
Yeah, I don't have anything to share. Excited for DAS. Yeah, it should be good. Lineup looks great.
Yeah, Nigel Farage is going to be there. Confirmed.
Big if true.
Farage. Ryan, are you familiar? Fan or not a fan?
Indifferent.
Fair enough.
Ryan doesn't do politics.
Yeah.
He said he doesn't vote. It's for silly people.
You don't vote?
No, I don't vote.
That's fair. I can't vote legally. Just thought it was relevant. Okay. Very good. Enough chit chat. Let's Big news this week is Pump.fun. It is up 3x. I'm pump blind. I don't have enough. I have very little. It's one of the few times that Daniel Smith can at me and say, "Are you sidelined, you bozo?" So it doesn't feel great at all. Maybe I'll pull up Teddy's tweet. Danny, do you wanna talk a bit about your pump story?
You want me to talk about my pump story?
Yeah, not like that. Like in general, if about pump a bit, but since you're our
Some background on pump? Yeah,
Yeah.
happy to. I guess the big thing was at the ICO. I don't know. I think a lot of people maybe crashed out wanting to get allocated to pump at the ICO. It is one of the most profitable apps in crypto. But at the time, like Pumpfun was kind of making waves. There were, maybe folks had some difficulties with the sale on centralized exchanges versus on chain. You had people who got in at the 4 billion ICO and basically got a free plus 50% in a few days. So post sale, it struggled. It didn't have the narrative in its favor. The metrics were down because of Pumpfun kind of like taking some dominance for that month. And then kind of as it consolidated at the lows, I think some of the big takeaways are that Elon and Co. like they changed up and the buybacks from 25% of revenue to 100%. So they started shipping all of the ongoing revenue into the token, and then they took back. Bonk sort of lost its share of Launchpad tokens and trading volume, so they took back all of the prior market share that they had prior to Bonk taking it away, which obviously improved kind of that. If you're looking at it from a fee evaluation perspective, as well as the buybacks back into the pump token. And then now, like within the past few weeks, the creator capital markets is like the narrative, the tagline they're running with. So the live streaming has been pretty popular from like a virality standpoint. So I think the big takeaway that they're running with is like new creators spin up a token, they get paid creator fees based on the volume from that token. So if they get a viral clip or whatever, a bunch of people see it, they can trade the token, and then the creator actually gets a ton of money, more so than they otherwise would if they were on like a Twitch or YouTube variant, where you have to rely on ad revenue or sub revenue. So you can get a big payout really quickly. And that's been running.
Yeah, just to give some maybe like numerical context here, end of July to early August, Bonk was like 60% of Launchpad revenue across all Launchpads that we track, which includes both Solana and base ones. And Pump was at like 10%. Now we are back to Pump being like 90 to 95%. Now, one like common criticism here is about like Launchpad revenues are down overall. I don't think that's the case. I mean, they're not as high as they were in December, January last year when we saw the president of the United States posting meme coins, etc. But they are, despite what I might want, they're not as low as most people expect them to be before they get snarky and say, "Oh, but like all Launchpad revenue is down." It's not. I guess like one thing is the buybacks. People are a bit worried that the consistency right now, the cadence, the amount might stop going forward. Ryan, Teddy, do you guys have any opinions on this? On like, well, first of all, Ryan, I'd love to hear your thoughts on, because historically we've said, oh, you've said Hyperliquid's buybacks aren't great because they are price indiscriminate and almost all of their fees are being used to buy back. Do you share the same opinion with Pump, or is it mostly related to if you have allocation and exposure to a token or not?
I agree. I think, and if you listen to Noah's interview on Unchained, he basically said as much. I think, however, what's going on right now is that there's clear, like the market's rewarding that behavior, so it makes sense to do it. Hype at a 98% buyback and Pump at 100% buyback, and Athena's joining the game this morning, and it's clear that the market's rewarding that behavior. And I think it's important to keep the context in mind, 2024 and 2025 was a time when token holders kind of like rose up and identified this problem between equity entities and token entities, and how the equity entity was usually siphoning the value from the relationship. And in almost like a gesture of goodwill to the market, I think projects are doing their best to show alignment between the token and equity structures, and so they're doing that buyback. So I think that context is important, because perhaps without that, like pump and hype don't do as well. And there was like, if you remember, like in the wake of the ICO, there was like, when people were dancing on Pump's grave, it was like universal outcry that like, this is a scam token. The equity entity does not care about the token. And now you can't make that argument, right? They've acquired $200 million worth of Pump on the open market, and they own a big bag. So there's clearly alignment, and that's what they were trying to signal. Is it ideal? No, it's definitely not ideal. And again, Noah acknowledged that on their most recent pod.
You think they have to do it because historically there's been this massive divergence between? Yeah. Okay.
Yeah, definitely. It shows it's a gesture of goodwill to the market. They originally rumored 25%. I think probably if Bonk didn't happen and really scare the market, you'd probably see that 25%, and price would probably be where it is or higher. But you're in this weird historical moment where there was just like a lot of strife with the token and a lot of uncertainty. And I think this 100% buyback, like really, it signals to the market that, there's no conflict of interest. They're aligned with the token. And that like, they're in it to win it.
Do you think like are some of these teams like Hype, Pump getting almost screwed by path dependency here? Or do you think there's a point in the future where it will be viewed as okay to reduce the buyback ratio from their earnings?
I don't know how crypto markets are going to react. It's a market base that like I don't fully understand. I don't think anyone fully understands, because it's pretty erratic and hype driven. I can look to TradFi, where it's like, I remember when there was rumors about a Google dividend and the stock fell because people were like, growth at Google is over. There are like sophisticated fund managers that believe that crypto projects massively over earn, so it makes sense to return capital to token holders, and that's what they want. There are also people in crypto who believe that 100% of revenues should go back to buying the token, and that the equity token like separation makes sense. So like it's a pretty mixed bag, I think. But if you are going to pare back that buyback, which like I think obviously I think it's highly likely that will happen. You want to do it as revenues accelerating, right? You don't want it to happen as revenues going down. But like Pump's in a really good position now. I think you probably see this momentum continue, and like who knows what it looks like in 6 months.
Yeah, I guess you can stop buying back as much if you're making whatever, like 3 mil a day, and then you start making 4 mil a day. You could probably reduce it to 75% or something and still be fine.
Yeah, and to go back to the point of like, are they a victim of path dependence? Like totally. I still think that this ICO had all the characteristics of like a massive post ICO pump, where it was just an ultra low valuation and everyone had an allocation. So, there's no reason to sell at the onset. It's only the people who don't have access that are there to buy. I think that the thing that obviously threw a wrench into that was this massive loss in market share. Like Pump revenues basically went to zero for a few week period, and there were no comps from the team. And if you listen to the Unchained pod, they talk about how like it was the 1 week that they've gone on vacation like 12 or 18 months. And Bonk, did this just masterful, attack on Pump. So yeah, like they're definitely a victim of path dependency. Our original view is that the token was going to re-rate meaningfully higher in the months following the ICO. And I think you're starting to see that happen in the market today, where revenues are at their highest point since the Libra scandal. That there's more innovation going on in the trenches, and like, kind of like the like the vibes are back as far as like participating in the trenches, and you have a token that's still cheap. So I think you're set up for that thesis to unfold.
When is it expensive?
Like 30 times sales.
What is it now? Do you know?
Depending on your look back period, not sure. I can figure it out.
Teddy, anything you want to add?
Yeah, I mean, I tend to agree with most of that. I think that if they did reduce buybacks, it would probably have to be slightly better communication than it has been in the past. Like, I think increasing buybacks without communication is probably a fine signal to the market, but decreasing them and not really saying what that additional capital is going to be used for, I think would make people ask some questions. And not that I don't think that they could kind of use it for growth, but they do have this kind of $2 billion cash pile that nobody knows. Like, are they using that for growth, or is that like, did they sell those tokens? That's their money now. I think people have a lot of questions on that still, and that was why, like, the main argument I saw for why people were not willing to buy it at 0.002 when it was like trading below its cash value. It's like everyone's like, well, it's not our cash anyway. So I think that was kind of why it was worth a shot at being like, okay, well, everyone's base assumption is that this money is theirs now, not ours at all. And so I think it kind of made it attractive to be like, what if that's not the case? But then again, in crypto, like, I haven't seen anyone maybe do a great job of going out there and kind of doing M&A and using capital for growth. Like, you see Uniswap building the Uniswap wallet, and like, I don't think that increased their distribution at all. Like, I don't know anyone who's like, oh, thank God, now that Uniswap has an app, I'm gonna use that so I can trade coins there. So I don't know if, like, I think the Pumpfun app has been more successful than the Uniswap app, but I just would like to kind of hear their plans on how they actually use capital for growth rather than.
Yeah, that'd be really interesting, because I mean, the only thing we can really verify is like the buybacks, and just because it's like on chain for the most part. I guess like the revenue and stuff as well, but we really have no idea what like their costs are. Their buybacks have been fascinating though, just because all the execution is actually happening on chain, and like, it's not horrible. And a lot of it, I think, is thanks to, like, you think it'd be like pretty bad, honestly, because they're just doing massive buybacks. Like, I don't think this would work as well for any token on Ethereum. And I think like one of the big things that's helping that as well is it looks like a lot of the prop AMMs are parts of these transactions. I can like share this link in the chat, and you can kind of see, you know, kind of all the other prop AMMs being part of these orders: Goonfi, Humidify, Teresa 5 or whatever. And like, some of these are, to my understanding, it's like a mixture of just kind of scrappy devs and actual like legit market makers, like Wintermute and like DRW. I'd be surprised if Jumped didn't have one. And yeah, like, the execution isn't bad. Just, I think, thanks to the fact that there's actually a lot of demand for a lot of trading for like SOL USDC on chain. So that's definitely helping absorb some of that. But yeah, I would love to know the actual pump team's costs and like what they're actually kind of doing on that side with all that cash, because I think that was everyone's like fear during that raise. Like, everyone was like holding their breath because they raised like, you know, like $1 billion of cash, and then it just like went silent for a week. And like, everyone's like, I think I know how the story plays out. But
It was good verification.
They also increased the allocation to VCs a lot, and
right, yeah, the terms changed.
Raising more than they said they would raise, and more percent from VCs than they said what they would. I mean, it worked out. Like, it's 2x to ICO now. So if you entered and added back in, you probably have like 4x at this point.
Yeah. And they've bought back like 6.6% of the entire supply already. What was the float at launch? It was like 30. It was really high compared to a lot of tokens.
Like 25%. It wasn't like $1 billion.
Like, that's a pretty large float. I think that was also like part of the thing for their launch. It was like everyone was scared, and like there's a ton of the actual supply out there. So, I mean, it was a great opportunity for tokens to trade hands, you know.
Yeah, I think so. Where does talking about Pump? Wait, Ryan? You want to say something, and then I can do my segue.
Yeah, it was just a silly moment in markets when Pump was trading, by my estimation, at 1.2 times cash on July 28th. At the same time, BMNR was trading at 2.2 times its balance sheet. Right, so like you had this entity that was basically trading in line with cash that actually had a business that was like highly cash flowing. And then you have another entity that at best is going to generate like a 7% yield and is trading at 2 times its assets. And crypto was like, this is the obvious bet. It was a silly moment. Which is why crypto markets are so great. They give you those moments.
I mean, to be fair, ETH did go up 3x during that time. I don't know what BMNR did, but like it was a fair thing to take.
The market priced 1 ETH the market was paying, buying 1 ETH for the price of 2, and it, was selling, Pump close to a discounted treasury.
Yeah.
Like, it was a very stupid moment.
Well, that's just because it's ultrasound money. That's the ultrasound money
Right.
premium.
Pump, I get, yeah, that's technically true. Pump is not ultrasound, so you have to incorporate that ultrasound premium.
I guess the bigger question here, Ryan, would be whether your statement holds true like in a month or 2 months, right? Because I think there's a lot of like examples of this where you could pick out, the like timeline excitement at a point in time and then look back on it in a month. But for this to still be positive, like in a month from now, is Pump higher or, at the same valuation it is today? Like what's the expectation there?
Yeah, I don't know what happens in a month, but I think that
or 6 months.
Yeah, I think that, a framework that I used to really think about a lot with investing in crypto things is like, is there a path to a $100 billion valuation here? Like, can I envision that path? For a lot of crypto things, I think it's really hard. I think for Pump, that I can conceive of a path to a $100 billion valuation with its current business model. Like, streaming doesn't have to be a big thing.
Can I ask 2 questions about this? First of all, my first thing is going to be a statement, actually, not a question. One, this kind of proves that, Lord forgive me, but you were kind of right, Ryan, in that there is a front end moat, and Pump had it over Let's Bonk.fund. Sorry. And the second thing is, do you think there is a chance that since Pump clearly has this front end mode, they could build out the backside on their own, an L2, but like their own L1 or like a network extension?
So Pump does not have a front end moat. It does not own the user today. Still 60% of its volume comes from third party apps. Its front end, except DAUs on the front end is growing, and you see that the team tweeted out that chart from early June to today. DAUs went from 10K to 36K. So it's still a small number. A lot of the flow still comes from third-party apps. The lack of front-end ownership is the biggest risk to Pump. And within that context today, doing your own L1 is impossible, right? Like, you saw what happened, what Bonk did to it. How is it going to have its own chain? These are ephemeral pools. They're not permanent pools. So they're constantly being issued, and then they go to zero, and you move on to the next thing, and kind of doesn't matter where they come from, right? But I think, obviously, if Pump can succeed in having a large installed base of mobile app users, then obviously, like, doing your own chain they're going to want to do that.
I feel like what Pump proved is that they're operating from a position of strength, right? Because their response to Bonk was quite strong, right? Like, they increased the amount of rewards going to creators. They rolled out this new fee tier based system, like trading volume, and then how that plays into the fee tiers and how much they give back to creators of coins, which feels like a direct kind of response back to what Bonk was promoting, but probably also like if they were paying on the back end that maybe we're not aware of, if it was not public, to steal so many token creators. It seems like they had a pretty clear response.
How much do we think Bonk paid?
Well, So like, if you just go by the public numbers, what Bonk proved is that there's massive consumer surplus in the meme coin market, or that demand for meme coin trading is highly inelastic. So I think like at the time that Bump kind of tried this attack, Pump's like all-in fees on the bonding curve were like 1%. Bonk came in with actually higher fees. It came in at 1.5%. And what it did was it just funneled 1% of that fee stream to token creators. So what Bonk actually proved is that Pump has massive pricing power, much more than it is realizing today. And if you think of like all the levers that it has, building out the front end, more creative reward structures, it's I think it's really bullish Pump what Bonk revealed.
Teddy, you unmuted for a second and then got scared.
Well, on that point too, I think like Coinbase has proven that over the past several years that people are willing to pay like 3 to 4% on a swap. Like that swap function they used to have, that you could go from one asset to another without having to like settle in USDC or USD and buy another one. People are willing to pay 3 or 4%, and like these are much more volatile assets than Coinbase has listed. So like the fee tier is relatively low. Now I'm not saying that they should increase fees, but on the how much did Bonk pay too? Like I think that was kind of a gut feeling that I had too, is that nobody was really using Let's Bonk DAT fund that I knew of. Like I never heard anyone say that they were using it, but like I would have conversations with people in real life when they were actually like talking about Pumpfun or using Pumpfun, like people that were not crypto native people. But I feel like that's kind of been the whole feeling with Bonk the whole time, is that it's like kind of a inner crypto thing. Like it never really got out to people. Like normal people are like, this is, or we're not, like, this is funny, I want to buy Bonk. Similar to how people were with Doge. It felt like a very forced inner crypto thing. Like we're going to come up with a.
Yeah, that's kind of how this category works though. But Teddy, is like, we have some stats on that block actually on the Launchpad's pages, but I know that like for Pump, if like 60% or 70% of volume is coming from third-party trading apps, for Bonk Fund at their peak, like it was 70, 80, 90%. But it's exactly as you'd expect, right? Like nothing really changed to people trading. Like you're still using Axiom or, Photon or Phantom or what have you. It's just the contract address ended in Bonk instead of Pump.
Also, you are seeing the early beginnings of Pump entering the front end space in a meaningful way from that daily active user number. It's increased almost 4x over just a few months. So that that's really promising for Pump to actually earn more of the meme coin supply chain total fee. I'm looking for this chart. I'm digging in Slack for it, but we have if you were to just sum like all the players that are taking money from the meme, or that are generating revenue in the meme coin supply chain, you have like Pump, Axiom, GMGM, Phantom, etc. Total meme coin associated revenues have actually increased 3x year over year, whereas Pump revenues are up like, I don't know, call it 2x year over year. So there's a lot of pricing power there that like Pump's not realizing. And as it moves in more into the front end, you're actually going to see like just natural tailwinds of Pump seeing growth, and then you're also going to see them taking increased market share of that supply chain if they can pull it off.
This is the last thing I think is kind of relevant, and then I want to segue to base token, but also interesting that it's like what, 10, 15, 20x more tokens that launch on Pump hit 1 million market cap versus those that launch anywhere else. Like there's clearly more. I don't know if the token launches are better, they're bundling it better, or if there's just more money flowing through Pumpfun, but like tokens are actually going up over there. Not tremendously. Like I was also thinking about this after what you said. My producer distracted me. After what you said, Ryan, like they're ephemeral now, right? So they just go to zero. But before it wasn't that bad. Like before it wasn't crazy to say, okay, like there are goats at $2 billion. I gotta buy something else that's like at 30 mil, and you're like, oh, this might like hit a 10x. Now I feel like I'm not like ever like, oh, this might go to 300 mil. It's more like, oh, I bought this at 70K. It might hit 1 mil, and that's like, I mean, I guess what I'm hoping for is the same outcome on my end, but these tokens are just not going up to as high valuations, which is obviously a function of like, A, how many tokens are happening, B, changing dynamics, like a lot more vamping is happening. Anything else? Like,
yeah,
I mean,
go ahead.
I'll go for it.
I was gonna say it was pretty interesting. If you look at like the Atom Tech Dune board or Dune dashboard, there was like thousands of coins graduating kind of during the summer of last year. Like there would be several days where it'd be like 1,100, 1,200. Now it's like on the good days still it's in the hundreds, 200s. I mean, it's a meaningful difference of like they are getting as much volume, but it's across a wider set of tokens, which I don't think is a good thing. I mean, it feels like it's an okay thing, but it doesn't feel like a great thing in terms of attracting more users. Because I think, again, having a handful of like huge runners gets more mind share of people who aren't using it than getting a bunch of them that go to 1 million or 2 million. But I could be wrong on that too.
But is this comparable to the like Solana versus ETH thing where it's like, okay, we're gonna have like a gorillion transactions, but it's gonna cost very, very little? Like, isn't the point that you can launch 1 billion tokens and it doesn't matter like how much trading volume there is in total? Well, that's what matters. It's not like per token, but what matters is if you're doing $10 per trading volume per token, it's just as good as if you were doing for like the opposite way. Does that make sense? Do you get what I'm trying to say? I explained it horribly. But...
No, I get what you're trying to say. I just wonder if it's as sustainable or as good for actual growth if you don't have as many like large runners, as you said. Like when you see something at 30 million, you're like, okay, that's not going to 300 million.
Yeah, I was thinking about it though, but like the emotions that I get are probably the same. Like if I'm buying at 20K and I'm holding it until 300K versus if I'm buying at 30K and if I'm buying at 30 mil and if I'm holding it until 1.5 or something like that. Like does that make sense? Like I'm getting the same emotion as I did before. Like I'm hitting the same amount of X's, but I have to enter a lot lower, which is not a bad thing necessarily. Because like now everybody's used to it. Like right, like Ryan's sending in tokens at 40K, I'm sending in tokens at 40K, versus before there was like, unironically, what like Elon wanted to do kind of worked out in that it's not like I couldn't send a token to Danny. Well, maybe to Danny it was fine, but like I couldn't send a token to Ryan that was like 3 mil market cap a year and a half ago, right? Like it would be weird. But now I can send him something that's like 50K and it's like, yeah, this might go up. And it's like we both understand that it will likely go to zero. And it was the same with the 3 mil coin. But now like the dynamics have changed quite a bit. That
I think that's true, but I think that the smaller ones are more likely that you have like snipers and bots winning on those rather than like actual people like running it up from 30 million to 300 million. And I also don't think it gets like is viral in terms of like getting people actually talking about it. Like it's the 30 million, like you're not seeing a 30 million coin being talked about on Bloomberg or MSNBC or any of that. It's not like they're not talking about that, but they were talking about WIF at one point, and I do think that brought like a new user base in that people are like, oh wow, you just see WIF go to a couple billion or 4 billion. I feel like I should buy some of these. If something goes to 30 million and straight to zero, I don't think that brings people like, I wish I would have bought that.
Think about how solvable this is. I think that the framing of graduation rate is very incomplete. First, like graduation rate, you're looking at every single token that's created and then the ones that graduate like to the AMM or whatever. But like think of like what pump front end is. It's like it should be a feed of some sort. It should be a filtering mechanism. And you know, a normal user shouldn't see or have the opportunity to invest in every coin that is generated on the blockchain every day. So you almost want to adjust that for what Pump can then filter and show to users, because it's a permissionless system, right? Like, you know, we can pump out 1 trillion coins tomorrow if we want. It would send the graduation rate to nothing. What matters is like what the user experience is. And like, it's pretty clear that Pump's working on that. So like from a user's perspective, it's just what they see and what that probability is on like that mobile app like front end, not like what's going on chain between bots. Though that does like help pump profitability, trading back and forth, and these bots like trying to hurt one another. The actual thing that will matter for the long run for Pump is what that user experience is and what they see scrolling through their Pumpfun mobile app. Like right now, you have no filtration mechanism at all. It's not going to stay that way.
Just raw microwaving of the.
Just literally every coin that gets printed flows into your Axiom and Pump feed, and that it will not be that way in the coming months.
But then we can't use Pumpfun for news.
Well, no, you'd have a smart filter, right? That knows how to filter out, funny, useful, or potential runners versus, things that come from, addresses that don't end up getting attention.
I'd love like an algo
or duplicates, right? Like just filtering out duplicate coins is huge. Like if you go on Pumpfun on like the weekend and you see, tens of dozens of coins with the same names that are all being pumped out at the same time, simply filtering for like first come first serve on a theme would dramatically like change that that graduation rate calculation.
I do think the other big factor, like especially when you're thinking about last year, like in context to number of coins and what market caps, etc., how much things goes up. I do think like there's a path dependency part of this where, I mean, I feel like Teddy, you kind of described it, but the market was going through the dynamic like actively of, maybe there's 10 new coins a week to now maybe there's 10,000 new coins a week. And I think you still had the holdouts like late in November of last year that were like, yeah, WIF is going to go back to 5 or 10 billion. Like I have 50% of my port in this thing. I'm sure that it's going to go all the way back up. And, you saw a bunch of big, like some of those bigger meme coins got, instant centralized exchange listings, like after the election, when Pump was confirmed as president. We saw WIF and a couple other coins like get big listings on Coinbase, Robinhood, etc. So there was still, I think there was still like some belief of like the market kind of being that same format as it was, at end of 2023, early 2024. But I do think like we were going through that shift, that gradual shift of like, there's 10 coins a day, there's 100 coins a day, there's 1,000, there's 10,000. And like the trenches were kind of reacting to that in real time as like, naturally your expectation of, peak market cap should trend down.
Yeah, this is Melania's fault, by the way. The general trend, completely her fault.
Yeah, it's the same idea though, I think, with
but like I guess what I'm trying to get is like imagine a world where Pump is like a consumer app that hundreds of thousands of people are using per day. So just like a 10x from here. And that's where the users are. And 100% of Pump flow comes from a Pumpfun app. Like the curating totally changes that game to where you can be creating thousands of coins per day, but all that matters is what happens on the Pump app.
Yeah, I think that's fine. It's just more so commenting on like, we do have this raw path dependency of going from a prior state of how trading meme coins used to be to how it is today, and as well like current liquidity versus a prior period. Like, I don't know. I think if you look at the Trump token launch and the amount of trading volume that was happening at that time and the amount of liquidity that was like in the market to, ape meme coins, and you compare it to today, it's like, it'd be very hard to make the case that like one coin is going to go that high. But I agree with what you're saying. Sure. Like grow the app 10, 100x, and the outcomes can be very positive.
Okay. Danny, shall we?
Yes, we should. Give a quick shout out to our sponsors for today's stream before we get into anything else. This episode is sponsored by Katana. Katana is an L2 built for DeFi and is pioneering the ecosystem category of productive TVL, believing that change should be graded on how efficiently assets are put to work in DeFi rather than just total value locked. From now until the end of November, users that bridge to Katana can earn boosted yield from CAT incentive campaigns, added vault bridge yield, and other chain revenue. Follow the link in today's show notes to get started. As well as EigenCloud. Is your treasury losing value to inflation? Learn how to make digital assets like ETH and SOL productive with uncorrelated protocol-driven staking rewards. For CFOs, DATs, and corporate treasurers, the path to integrating liquid staking and restaking should be risk managed and aligned with long-term strategic goals. The Productive Treasury Report from Liquid Collective and EigenCloud outlines practical adoption and a forward-looking vision for the role of the modern treasury, as a strategic enabler of new technology. Read the Productive Treasury Report today by following the link in today's show notes. Let's get back to it.
Very good. Okay. Shall we talk about the base token a little bit? Does anybody have any strong thoughts before I give my thoughts?
What is that?
So there's this L2 called Base, related to Coinbase, and they decided today to announce that they are exploring a Base token. Now, what this means in the context of Coinbase is that
they announced that they're thinking about an announcement.
Yeah. So this means that they'll probably launch a token over the next 6 to 18 months.
Cool.
But it could be pretty exciting because I've done transactions on Base, which means that I could get an airdrop. But I guess like in the context of ETH, is this bad? Is the number one question. Number two question is this bad for Optimism and Arbitrum tokens, ARB tokens? And I guess the number three question is, how does this work with the coin equity itself? If anybody knows anything about this, I would love to hear.
I think it's interesting. I mean, it's a great way for Coinbase to monetize. I imagine that they're a more conservative organization. So right, like, Binance, was obviously beneficial for launching BNB token and owning a lot of it and watching valuation go up. It really helps your balance sheet. Binance gave a lot of fee revenue at one time. I think it was 50% to burn BNB token. I think in the ideal state, Coinbase does something like a BNB or like an FTT with the base token. I think that would be great. But I wonder if, I just wonder how risk averse the entity is to getting experimental with this token. I also think, like, I have my doubts, right? Like, the Base and Coinbase team really promoted the Zora token, which was, a meme coin. Like, they're clearly okay with that structure. Like, I think, worst case scenario is that it's a meme coin. I assign a non-zero probability to that.
You assign a non-zero probability that they launch Base as a meme coin or as a non-governance token, I guess, like non-utility token.
Yeah. I'm not saying I think they will, but I think that there's like a non-zero chance there, just given their historic support of, Base-related meme coins. Though I think, probably a pretty good chance that you get like an FTT-like structure. I think that'd be great.
FTT-like structure being that they burn it.
Yeah, that they siphon a portion of the revenues to either buy back the token, and then they add bells and whistles like market makers stake a bunch, and then they get lower fees.
Yeah,
I think
let's continue.
Yeah, I think the interesting thing with specifically like the Coinbase and Kraken tokens is like they're going to be the two exchanges that are actually like public equities and also have tokens. Every other exchange has a token already, and they literally just kind of like make it their in-house easy to pump coin. Like obviously, like a lot of them also give it to employees as pseudo equity, because like there's not really like active liquidity for equity of like OKX or like Binance, Bybit, any of these things for the most part. So they just kind of shove it into the token for the most part. And I mean, we saw that a couple of weeks ago with like OKB or whatever. They just woke up one morning and decided to burn a bunch of it. Token price goes up. To your earlier question, Block, though, on like whether it's bad for Ethereum or like other L2s, I guess you could maybe make the argument it could be bad for Ethereum if they actually choose to use it as like a native gas token. Because I mean, it's really kind of hard to paint the picture now, like how L2s are like, how do those accrue any sort of value to like ETH, the asset itself? It seems like all of them are moving further and further away from that. I don't know how much it would like affect like Arbitrum and stuff like that. Like I think it's just kind of like too early to tell, and like whether or not like someone would stop using Arbitrum and start using Base just because they have a token. Who knows? Like unless like there's active like incentive campaigns. But I mean, this was like inevitable. I just wish that Jesse would like stop teasing it. I think the Base team is like, they love teasing. They love like saying like, you know, like it's just for fun, like we're just experimenting, we're just trying stuff. It's like just like, I don't know, if you showed like a bit more concise effort in a project and like this is our aim, like this is our vision, I think people would probably be able to rally around it a little bit more. But maybe the looseness of that strategy also attracts like some more kind of curious builders where it's like, yeah, I'm curious too, like this seems the right environment for me. And maybe they're trying to tap into more like the kind of traditional like Silicon Valley audience there. But I mean, it's just I'm glad they at least announced it, but I think it could be kind of weird for like a company that like has like a pretty large public equity already.
Yeah.
Because like if they do take like revenue and like buy it and burn it, like I mean, if I was a shareholder of Coin, I'd be like, I wanted that money. And why is it going to the? And that's like the token itself slaps some sort of premium on the equity too. And like, there's no saying that like it's impossible. We'll see, but I think that's like just kind of it'll be a weird one for them to figure out how that works. But like, I don't know how Kraken is thinking about this. Like, obviously they announced Ink a while ago, but I don't know if any of you guys know about Ink or have used Ink.
I've checked it out. It makes it's on the super chain as well. It was like a very little portion, very small portion of anything that goes to a super chain. And like based on I think CoinDesk wrote about it. And at the time, Optimism gave Kraken a 25 million OP grant worth around like $42 million. And then when I checked, Ink was they had made 14K in fees over the past month or something. So it's like clearly like a very different arena. About that like equities thing, does base sequencer revenue, does it show up in Coin financial statements?
Yeah. I mean, I just got to jump in, Ian. You make a great point of how hard it's going to be actually for Coinbase to do this. You can't airdrop the base token to all Coinbase stockholders, right? You're actually probably setting like operationally, I don't see how you get around that. Like, how do you ensure that you're not screwing your stockholders by funneling revenue to this new thing? There's probably a reason that they're taking it really slow.
I will say the one thing I latched on was the like being a native gas token. I think that's pretty like much a moot point for Base at this point. Like we already know that they've been experimenting with paying in USDC, having like free sponsored transactions. So I think for a long time now, this statement of like Base being like super positive for ETH because they're going to use ETH the asset and XYZ other reason has been pretty much like cope arguments from the ETH camp. Like Base and Coinbase, they're building this to be a very successful like venture and chain and ecosystem like for them. And sure, maybe for their community too, right? Drop them some base coins, but they want the win. They don't want Ethereum to have the win.
Yeah, and I think like you asked the question, like, is this moment in time? Let's say they do a base token and everyone's happy about it, and there's no conflict of interest with the equity, even if it were perfect. I don't think that like it matters much for like its relative market share of in the L2 ecosystem. Like Base is kind of running away with it. It's the only thing that has a distribution advantage. ETH is fading to the background, becoming less and less relevant, and Arbitrum and Optimism are falling behind.
I mean, yeah, it's tough like to compare any L2 to Base. I will say Arbitrum is doing better than Optimism, but it's like they're racing for the second spot. I don't really understand the ETH vision, because my concern here is that if ETH is very much L2s and most of revenue, REV, whatever is activity, everything is on Base, then, and if they use Base for gas fees, or if they add any form of meaningful thing to it, then it's instantly like, I'd rather buy Base than ETH, right? Because it has the same thing. Like if Ethereum goes up, people are going to start using Base more, so Base will go up. But Base to me,
I could also
like, please.
Sorry, it feels like. Sorry, Boccaccio. I think you could see Base actually having their own chain. I think that's a lot more likely, let's say, than like Pump, which we were speaking about earlier.
Like L1?
Yeah.
Why?
Like, why stay in L2? Like,
why
especially
not?
Well, the SEC came out today and said single sequencers are exchanges, but like they also are an exchange. So like maybe that fits in nicely with them. Maybe they wanted this, and like they want to kind of make everyone else jump through those hoops. Whereas like they're like already kind of well positioned here. But like them being their own L1, I don't know, just like kind of gives like some sort of like additional supply sync for the tokens, some sort of like new utility there. They could even make the argument that it's like more decentralized now if they let like third parties run validators as well. I mean, it's obviously a harder lift than just like staying in L2, but like I'm just floating that idea. It's like if that I'm sure it's one of the considerations they're thinking of through the process at least.
I mean, if you think there's some infinite premium to being an L1, then
like that's gone.
It would make sense for that reason alone, right? Like if you get an instant multiple in this token and you own a bunch of it.
But the L1 premium is gone, no? Like it's dead.
I think, yeah. I think you're right, Bach. Like I think like the L1 premium was like largely like like a product of private valuations that were too high, and so like you just naturally launch at this like higher premium because I think everyone was like comping to like first you comp to Bitcoin, then you comp to Ethereum, then you comp to Solana. And it's like, well, like looks like it's a massive market. If my competition is like like $200 billion asset, like two or three sounds kind of modest at that point. Whereas like I think like the L1 quote unquote premium has to exist from private valuations. I don't think it's like a natural thing of people would be like this asset is worth more because I can pay gas in the native token and I can stake it for an inflationary yield. It's like I think it's largely a facade.
Yeah, it's all fake, number one. And number two, I feel like tokens like Pump will increasingly lower the whatever L1 premium is left, because I guess like largely the reason that we did value L1s higher is because they always had some form of native utility apart from governance, like you said, burning, staking, which is what we viewed as utility. But now if you're an app and you can just buy back your token infinitely and everybody else can also do it, there's no need for an L1 premium. This is also partially why it kind of sucks being Uniswap, right? Like you fight the SEC for 6 years, you have the most dominant DEX, and like you're constantly at the forefront of like AMM research, and then you were too early. Like, I mean, they cashed out, I bet, and they should be very, very happy, but it's also like, it's a bit unfortunate. Like they could have been a very, very great company as opposed to a great company if they had launched. I don't know when they launched, 2019, 2018, whatever. If they launched like 3 years later.
I feel like that's a big part of it though, right? Like historically, up until recently, like crypto apps made no money. So all of the tokens were memes. So that it's like another compounding reason why, people just piled all their money into the L1 coins, because it was like, at least there's flows and there's staking and there's burning and there's things of this nature that you could maybe point to some utility around the token. And if everything is built on top of it, then there's something there. But, in the past year, 2 years, like now we have apps that make money and then the money goes to the token. So you can't really make that argument anymore. Whereas a lot of chains now look like the kind of meme product token where they actually don't make any money.
Yeah. Well, it's also harder to launch an app than it is. It's harder to launch an app now and make money than it is to launch a chain back then and make money. Like as a founder, it's very easy. I assume it's very easy to go to a large VC and say, look, Ethereum, not that good. I can make it much better. Simple white paper, raise millions, and then be done. Versus like with an app, I assume the comps are still quite low. Like I don't think you can go to a VC and say, look, like hype is at whatever billion. I want to raise that 600 mil, versus with like L1s, we saw that quite a bit. Right? Like you could raise at very, very high valuations and make a lot of money without ever even launching a product.
Yeah, I think that's completely true. I think that Uniswap got nerd sniped in the sense that they're going after like, we're going to have real assets trade here and fees are going to be super low because this is a place for professional traders. and then the real assets never really came. And so then I was like, okay, yeah, sure, there's a decent amount of trading volume, but then like when the memes came along, people were like, oh, we could actually charge 2% on these rather than Uniswap who's charging 0 and just paying LPs. Like,
yeah, I don't think the pump guys over intellectualized the AMM. It's like the perfect kind of mechanism if it's like 3 guys who want to trade one piece of shit between each other, where it's like if you're trying to like, you know, coordinate trading across like a much larger asset, you just need like a different order book structure. Like I think they they got one-shotted by that. I think I agree on that front.
Yeah, V3 was enough. You didn't have to do like, oh, this is actually like this one's super generalizable. Like you can.
But it begs the question. It begs the question, Block. Is V4 better than V3, and is V3 better than V2?
Yes. V1 is the worst, obviously.
I do think the whole industry kind of got one shot by like the tech back in the day. That was the big thing because there was nothing else, right? You couldn't look at the revenues because they didn't exist. So you had to look at the tech. But I think when the revenues started popping up, you kind of start asking like, okay, does all the nerd sniping, how much does that really matter?
But like you still see things cling on the tech, right? Like there's still a crowd that purely clings on the tech.
Yeah. And there are cases where it matters, right? Like, you know, if you can build a Solana or a Hyperliquid, like a lot of that, there is a lot of technical pieces to it, but like fundamentally, then it comes down to, you know, then they get a lot of usage and then they generate a lot of activity and then that leads to a lot of fees, etc.
Yeah, find something with product market fit before you like worry too much about making it the perfect product. I think is a lesson that crypto is just like hasn't really learned until the past several months.
Ryan, you've unmuted. Is there anything urgent?
No, I don't see it in the market anymore. Like big tech getting exciting technology getting high valuations in crypto in and of itself. I think that's over. I think like that it's like it's like the polka dot trade, right?
Yeah, well, Cardano still is like massively overvalued.
Right. I mean, like new things, right? Like
we had a bunch of tokens run on the like 10 million TPS idea a couple months ago, like Kita, Solaire.
I will say also like Solaire is like restaking as a whole was like a very tech thing. Well, I guess that's also like kind of an Ethereum thing. One thing I will say is like, no, I have nothing against Monad, but that one to me also feels kind of like a tech thing, right?
Yes, but I
that's
think it's also kind of like real at the same time. Like their whole they put a ton of emphasis on actually like geographical distribution and the fact that they're doing like 400 millisecond block times across every single continent. It's like actually pretty impressive. And like, but like the valuation itself, like, you know, we'll see what the market thinks about it when they open it.
Yeah, but it's a tech impressive. Like both of the things you mentioned are nerd snipes. It's like, oh,
yeah, well, you can't really,
and 400 millisecond block. Now, I'm not saying that like Monad is not good. I'm not saying it won't be good. I'm just saying like it's the last thing that I can remember that has been very much like, oh, this should go up because of tech is Monad.
Yeah, I think you're making the point that it's like it's a means to an end, not an end itself, which I would like totally agree with for like Monad. It's like, yeah, it's like the tech is good, but like, so what? Like you need something else. Like, unless you're doing like really good tech with an enshrined product like Hyperliquid or something like that, I don't think it really matters. You know, that the chain is fast. Like, who cares?
I think these teams recognize it too, right? Like if you look at Monad, Mega ETH, there's probably other examples. Like, sure, they're focused on the product, but they're also very like, well, we still have to wait and see if this works because they're not live yet. But this focus on like, you know, having a set of early ecosystem applications and maybe even some differentiated ones. But it's just one of those things where I feel like we've been debating this point for a while now, but we're still just kind of waiting for them to come to market and see whether it plays out or not.
I think they're very. I don't want to talk about this. I shouldn't say this out. Ian, please save me. Say something.
Are we going to talk about Solana DAT?
Yeah. Before we do that, let's do our last shout out to our sponsors for today's stream. As you know, Katana. Shout out to Katana. Katana is an L2 built for DeFi and is pioneering the ecosystem category. of productive TVL. In just 2 months, Katana has surpassed 500 million in TVL, with over 90% of that TVL being productive in ecosystem apps like Sushi and Morpho. From now until the end of November, users that bridge to Katana can earn boosted yield from CAT incentive campaigns, added vault bridge yield, and other chain revenue. Follow the link in today's show notes to get started. And EigenCloud. Corporate and protocol treasuries face a major challenge today. Cash and traditional instruments are losing ground to inflation. A new industry report from Liquid Collective and EigenCloud lays out the next evolution of the digital asset treasury, moving beyond just passively holding Bitcoin to actively making digital assets like ETH and SOL productive through liquid staking and restaking. For CFOs, DATs, and corporate treasurers, the path to integrating liquid staking and restaking should be risk managed and aligned with long-term strategic goals. The Productive Treasury Report outlines practical adoption and a forward-looking vision for the role of the modern treasury as a strategic enabler of new technology. Read the Productive Treasury Report today by following the link in today's show notes. Super convenient. Thank you, EigenCloud, actually, for leading us into this next topic, which is the SOL DATs, as Ian mentioned. I wonder if they are restaking with their treasury holdings.
Well, I think they're doing Jito stuff, no? And then they're going to do Camino DATs, the Camino DAT product.
I don't know if there's any official confirmation on that, but I think it's very, very likely that things like this would happen.
Some of their, they have made some explicit statements. Yeah, they did. They have made some statements in some of their.
This is an MMPI. Don't try to get it.
No. I just thought you were just shooting from the hip.
They're doing the same strategy. It's like wanting to utilize the capital in DeFi, generate additional yield on top of it.
Just like our sponsor, Katana L2 DeFi.
He tried it.
I did my one. I did my ad read.
Segue.
That was good. I think something happened in my head. I got stimulated there.
Well,
it's all about productive TVL. So
Bitcoin DeFi. No, that's not this. All right, let's stop. What was Solana DATs? I think Sol topped. Ryan Connor.
Some context, I guess. The multi-coins forward industries DAT supposedly has already shipped in their 1.6 billion into SOL over the past few days. Average buy price 232 is what was kind of reported. I think it opens up this question mark of like, we talked about this maybe a week, 2 weeks ago. Of there's a pretty clear SOL trade going into like a SOL DAT and maybe ETF season. Maybe you have to ask yourself like how much continuation do you get from here if they've already shipped in 1.6 bill. Well, I don't know about the other DATs though, and so if there's a couple other billion that's still to go in, TBD.
How can your average
coming from Pantera?
Yeah, 500 mil from Pantera through Helios, not the RPC provider. The company. How can you ship in 1.6 bill at 232? Price has been, I thought they started when it was like 160. So they didn't buy any on the run up. And then they just bought over the past 2 weeks. Like, how did that make it?
Maybe they shipped the majority of it in here at the local top. And so their average looks quite bad.
Well, I think also like the announcement that they were raising at least, like I don't know if they could actually start purchasing before it closed. Yeah. So that means that they made this entire purchase in this past week. But to also put it into perspective, like, you know, I'll flood my own bags here a bit. Like, you know, this is 25% of Solana's yearly inflation that they've just bought. Like that, like 1.5 billion is 24.3% of Solana's annual inflation. That's we're going to see just this year. It's not as bundled as ETH, for lack of a better term. Like I think ETH is far more liquid than people realize. I think the fact that like Solana's inflation is still quite high actually does kind of make this difficult. And I think this was really well forecasted in terms of like people like at least anticipating it. I think a lot of people like were market buying going into it.
I think a lot of people super forecasted this one.
I think a lot of super forecasters in the order books on this one. And then like I guess the other side of that is like you do have like the Pantera coming in with like another like 500 mil. But I think like kind of the main thing to watch in my opinion is like the spot ETFs, which I think there's like 8 or so spot ETFs that are like pending approval starting around like kind of mid to late October. and it's not just for Solana. It's like a bunch of other like kind of call them altcoin ETFs as well. But we'll see what kind of the actual demand looks like there. I thought the interesting, like it kind of made me wonder. It's like for these DATs that we're buying for like ETH and Bitcoin, were people like just hammering the ETFs, trying to front run / like also trade the momentum, and that like added some fuel to the fire there, and did like the lack of like ETFs for SOL dampen it at all? Or like, I just kind of wonder what you guys think about that.
Will SOL ETFs do well is a good question here. Like,
yeah,
the base case is assuming that yes, but I mean, ETH ETFs are doing okay, but it took them a while to start doing okay, right?
Yeah, a long time. Like there was essentially is like nothing and then everything at once. And that everything at once was when Tom Lee, he drew the chart, a couple question marks, and was like 54x. Let's see, and that was enough.
Victor, who is part of Blockworks research, Blockworks data.
Yeah, I wonder if like, do you think there's any sort of like trading that people do for these DATs and like ETFs and like try to like, I don't know if there's any sort of arbitrage there. I don't even know if that makes sense. Like buy DAT, short the ETF, or vice versa. I don't know if that is also a thing for that. Like,
do that. Yeah, people will do that because there's not much of a. There's like thinking from like an efficient market perspective. There's not much of a premium that you can assign to these treasury things. So when they get absurd, call it like 10% or higher, I think that's when you'll have people bet on that premium converging, and then you can do the arbitrage. Gotcha. It'll be easier with ETFs.
Yep. I guess Victor has a really great point here, though, like on the ATM issuance side of things, where ideally, if you're going to be selling into increased trading volume on the news, Ford has been doing 20 to 50 million in trading volume. That was last week. The top Ethereum DATs like BMNR, SBET, like BMNR's peak trading volume day was like $10 billion. So the amount of money that they were able to like, pull out of ATMs by selling into the market was pretty meaningful. If like Forward or some of these others new SOL DATs don't get a ton of excitement, trading volume, and a high premium that they can kind of sell into, then following these initial raises, they're not going to have a lot of additional capital to shove into SOL, which would be kind of concerning for the continuation of this trade.
Yeah, I mean, they're definitely late to the game in a lot of senses, but I do have some faith in Kyle Samani in a way too, to give more attention on it than there has been so far, if that makes sense.
Do we know who the chairman for the Helios one will be?
Not
Mert.
Definitely not Mert.
Ryan Connor?
I didn't read the press release.
No,
I haven't either. I think it'd be really. I know, like Kyle called out Tom Lee and was like, like that's debate, and I think like that would actually be really interesting because, I mean, Tom Lee has said some stuff about like ETH that just doesn't make any actual sense. Like he's clearly like
for everybody though.
But can I say something? Like
they're all doing this.
It's like you can't really debate against certain personas. Like it just doesn't work. Like if you put somebody against Trump, you can't debate against Trump. Do you know what? Like sometimes he says some stuff. It's not true. Like we know it. It's not true. But like you can't be like, Mr. President. That doesn't make any sense because he will call you like his little British friend, and then you're cooked, right? Like Ian, that's what he would do to you. And then you can't.
He'd do me way worse than that. He's got, he's it's too easy, bro. We have firing range.
To be fair, Ian, some of the new SOL DATs, like there's some clips going around of like the kind of the language that they're using, and it's like Solana can do 65K TPS, like Solana can settle all existing equities markets transactions in the world, like right now. I mean, regardless of whether or not they're true. I think it's just part of the game. Like Tom Lee did it, says whatever he wants. Like maybe it goes 54x. I don't know. That's what happened last time. Like maybe it could happen again. I think
it's like
they're speaking the talk.
The way, yeah, like they're both selling something at the end of the day. You're totally right about that. But it's like I think there's definitely some more legitimacy around like a true like tech growth story on the Solana side versus like on the Ethereum side. I think on the Ethereum side,
also sorry, finish, and then I'll get upset with you.
You can get upset with me now. It's okay.
No, but ETH was also a growth tech story, right? And it can be spun up as a growth tech story. Like, no?
Comparatively, it's less of an attractive story versus Solana, but you're totally right in its own sense of like they've accomplished something incredible. Like, you know, having like a bunch of like small nodes around the world that anyone can run the hardware on for the most part, assuming they can get like 32 ETH. Like that, it's really cool. Like, you know, like it's definitely the most decentralized network outside like Bitcoin, probably more so than Bitcoin even now. Like all the miners are so like, you know, aggregated across just a few public companies. But like it's not exciting in the sense of like this is not like the future of the financial system in terms of like it doesn't have the throughput, it doesn't have the speed. Like there's not experimentation happening on Ethereum anymore. There's not any native new novel mechanisms that we've seen on Ethereum because like it's just too slow. And like people don't want to innovate on like 12-second block times. Like that's not, if I was an innovator, I'm not going to go to the place that's like moving the slowest. I'm going to go to like Solana, and like you have seen all the innovation happen on Solana, like, and it continues to be the space for all the consumer apps too. So I think it's a much easier sell. But like I said before at the beginning of it all, like this is 20, like that one DAT was 25% of annual inflation. Like they need to figure that out in some way. Like you can't just like throw it under the rug. Like I think like 228, something similar to that should totally come back and have like another conversation around inflation because like it's a real thing. And like, you know, it's clearly like, you know, we talked about like L1 premiums. Like I think the only way you can have like an L1 premium is if you have product market fit and then shove it all back into the token somehow. And like look at Hyperliquid. Like it's great. You know, like they got everything right. They've gotten everything right so far. So, you know, let's keep that.
I guess what I would say though is like if we look at, I know Dan Smith gave me a quick rough number on Forward today that they're trading around 2x price to MNAV. I think the problem here is that like we're still trying to sell $1 for $2 when it doesn't really make sense to do so. I think the upside that you have here for SOL though, however, compared to ETH is that when these ETH DATs were all going crazy, the ETH ETFs were already available to purchase from in size. So like hypothetically, let's say you're the retail guy. Yeah, I mean, don't get dunked on, you know, buying the DAT company at the top and then it goes down. Buy the asset they're shipping into, and you can do that in size, like from any kind of major brokerage, exchange, whatever. For SOL, since you can't really, I mean, I guess you can get into the smaller Osprey vehicle, but it's quite small. It's not like, you know, it's not your BlackRock or your Fidelity. So maybe there's upside here in the fact that, you know, they shipped a bunch into SOL pre-ETFs, and maybe with more DATs and more ETFs coming in the future, you're potentially early to that move. But I still think this idea of buying 1 for 2 is just like, I mean, you're just going to lose if you're the one buying that.
I agree.
That stock.
I think it's largely demystified as well. I think when these things first popped up, everyone's like, "How are you doing that? How do you keep buying? What's that like?" It's like it was like magic. And I think a lot of people just kind of understand the game and like understand what they're buying. And yeah, I think a lot of people are coming to the realization like, you know, shouldn't be able to do what you're doing for the most part. But we'll see what they do on the DeFi side. I think that's actually kind of interesting because, to my understanding, I don't know of any ETH DATs that are doing anything outside of just liquid staking. And the structure over there on Ethereum staking is just, you know, completely different. Like last week, it was like the execute was like 43 days because during that like security incident, Kiln decided to, you know, properly like rotate all their keys. Like they're taking like a lot of consideration for their customers there. But like it's, you know, just absolutely screwing everyone else on the network who's trying to withdraw. Like 43 days in crypto time, like that's like how many years is that?
Yeah, I mean,
that's
some
crazy.
of these like LSTs might depeg, right, because of it.
Yeah, I want it depends who which one you're talking about. I guess the only one that's kind of notable is
Lido?
Steve, and yeah, I'm not sure. Steakhouse is a great dashboard with Steve on there and stuff, but yeah, I wonder because there's already kind of those stress tests with it was Justin Sun drawing a bunch from I can't remember what he's doing with it, but yeah.
How is he always involved? Do you know what anything that happens somehow involved with a lot of capital? He's in the top 5 to 10 of the capital, and he's always involved in any situation that happens.
It's because it's his world, and we're just living in it. He's a large percentage of the overall actual DeFi TVL. Yeah, he's a massive player.
Okay, Danny, shall we, guys? Unless anybody else has anything very urgent to say, shall we start wrapping it up?
Let's do it. You want to give
I'll give one last shout out. Guys, thank you so much for tuning in. This episode was brought to you by the 0x Research newsletter. Make sure to sign up and subscribe to the newsletter. We drop very relevant information once a day, what we're looking at, what we think of the market, what is top of mind for us. I think you'll find great value in it since it's free and it's very useful. Teddy, Ian, thanks for coming on. And to our live stream listeners, thank you for listening to us for an hour and 20 minutes. We really appreciate it. Anything else anybody wants to say before we shut things up? Okay.
Congrats to Ian and Teddy. The pump trade. You guys can get that second office chair now. I'm very.
I don't think Ian was exposed. I think Teddy made a bunch of money, and I don't think he's gonna let Ian.
Just Teddy.
We're looking. It was the Facebook Marketplace chair.
I'm sure we're
not going a full steel case one. So
I'm excited for you.
It was that meme where it's oh my gosh, he can't pump, and that was me in that sense with holding an unnamed coin, and you know where I'm going with it.
Can you put that?
I gotta explain it.
I don't.
Yeah, I'm a visual learner.
He's still researching pump. He's trying to figure out if it's
I'm still researching. Let's see. I'm doing some math of what happens if you just buy back.
Teddy says you got to get at least 18 pages into the research report before you'll make a buy. So,
yeah, that and hard labor.
Doing diligence.
Yeah.
Totally fair.